There are three main parts to how our monetary system works. It's kind of like a three-legged stool, and if any one of these legs is not working correctly, then the whole thing collapses. The first leg of the stool is the central bank. This is a bank that's run by the government. Here in the United States, we call it the Federal Reserve, but most countries have a central bank. The central bank's job is to set the rules or policies that all the other banks have to follow. They also provide the currency for the country, so they print up all those shiny new bills that you see at the bank, and they make sure that there's enough money to go around. The second leg of the stool is commercial banks. These are the banks that you and I use every day. We put our money into them so that we can take out loans and buy things like houses and cars. Commercial banks also provide a service to the central bank. They basically tell the central bank how much money they need to print up and what policies they need to set. For example, if people aren't borrowing money and buying houses, then the central bank will lower the interest rates so that people are more likely to take out mortgages. The third leg of the stool is the government. The government uses money to pay for all the things that we need as a society, like roads and schools and hospitals. They also set the rules or policies that everyone has to follow when they're using money. For example, they might pass a law saying that it's illegal to counterfeit money. Now, for this stool to work properly, each of these legs needs to be strong and stable. That means that the central bank needs to be independent from the government. If the government is in charge of the central bank, then they could just print up more money to pay for all their expenses. That would make the currency lose value very quickly, and we wouldn't have a stable economy. Similarly, commercial banks need to be regulated by the government. If not, they could lend money to whoever they want at whatever interest rate they want. They could also print their own money and then charge people really high interest rates on loans. Again, this would make the economy unstable and unpredictable. So there you have it, a quick overview of how the monetary system works. Do you think there should be more or less government involvement in the economy? Let me know in the comments below. And as always, thanks for watching.